We did see at the start of the Japan rally some of those foreign outflows really exiting China and then headed towards Tokyo markets. Has that trend just really been exacerbated?
Yeah. Okay. I was told that we were.
Yeah, exactly, Heidi. So we're seeing actually investors saying that they are seeing the Japanese equities more attractive than Chinese equities, and some of the top fund managers are actually accordingly trimming their China exposure and lifting their Japanese weightings there. And also, like the Taiwan largest fund company, they set up a new Japanese equity fund just to kind of as an alternative to the Chinese exposure. So on one hand, you're seeing the weak economy in China and also the geopolitical tension. But on the other hand, Japan's strong rally this year, driven by Warren Buffett's buying, weak yen, corporate governance, these are going to continue to push the Japanese market further. And Morgan Stanley actually downgraded Chinese equities to equal weight while still staying overweight on Japanese equities. So that says a lot about how the balance is playing out right now between the two geographies.
So, Winnie, what's the impact of the BOJ's tweak on yield curve control when it comes to the Japanese stock market? A plus because they're making the change, a minus because it creates a lot of uncertainty about what happens next.
Right. At the beginning, people were quite worried about how the monetary policy changes might weigh on the Japanese equity market. However, we're seeing that strategists from both Morgan Stanley and Goldman Sachs say that this can be a boost to the market further because it removes that uncertainty around what the BOJ might do. So that clarity kind of helped the market to potentially reach for a further rally going forward. And also, because the changes are coming gradually, we are not expecting a sharp appreciation in the yen, and that's also something that's positive for the market.
Are there any negatives?
Right. So in terms of risks, I think people are still saying that valuations of Japan are looking a little less attractive at the moment. And at the same time, global risk, obviously, around potential recession might still affect the market. So we're still watching if the yen is going to appreciate. So those are some of the risks that we will still keep an eye on.